A short review of today's PM session. So today we had two important news in the PM session. One was the 10-year bond auction at 1 p.m. and then we had the FOMC meeting minutes at 2 p.m. On the last review of yesterday, Tuesday 8, at minute marker 12:50, I mentioned that I was interested in the relative equal highs that we left in place. So if we go back here, I was mentioning these two relative equal highs from Monday 10:15 and from Tuesday 10:15 a.m. That I would be interested to see them being taken later on in the week. And according to ICT protocol, we have the red fold news on Wednesday, Thursday, Friday. So primarily the trades we're interested in are happening at this time. Also, if we look at the seasonal tendencies for this week, so this is the 15-year average and the 30 average, we see that the average for 30, it shows that it's likely to go higher. Furthermore, because the news are very bearish due to tariffs, the liquidity is up. So I was anticipating a move higher. What I did not anticipate, however, is that it will happen at 1 p.m. I would have rather seen it happen after 30 minutes after the FOMC meeting minutes. So for that reason, I have missed this trade. However, I did take other trades, more like scalps. But a good thing to know is that usually when we have 10-year bonds, 15 years or 30 years bonds, there can be some big moves happening according to past performance. But I was waiting for the FOMC protocol, which usually is 2 p.m. news hit the market. Then we wait for 30 minutes, and then we are going to look for a trade. So I'm going to explain a little bit some hints in retrospect that we had for this trade. And then I'm going to go to the trades happening after 2:30. So as usual, if we take the last 3 days range, we see it here in orange. So today is Wednesday, so last 3 days, Tuesday, Monday, Friday. So we have the quadrants here. And the previous day range, we have the quadrants here with black and then red for the 50%. I've also annotated the open and close for some of the candles that we're missing. So we have Friday close, Friday open. We have Monday high. And then Monday low, it's already covered by the last 3 days. And then we have yesterday, high and low, it's already covered by the previous day range. And I added the close and the opening. So, and then if we go to today's price action, we see that we have the 10-year bond happening at 1301, and then sometimes passes, and here around 1318 we see this like short drop. So it goes to take the sell side liquidity. Notice how it drops inside this fair value gap, hitting the middle point. And then it goes higher. There was some confluence here as well. If we look with the new week opening gap, we were in the upper quadrant of the new week opening gap of 6 April, so the current one. And we also had some confluence on the 1 hour. Notice this order block over here. So we have the order block for 46.25, and the price goes just a little bit below that at 420. And then it goes higher. And notice how price is coming to the relative equal highs. And it goes above it. There was some indication that price is going to go above it as well due to the new week opening gap and new day opening gap. So as ICT is teaching, new opening gap happens every Sunday. So the Friday closing price, we can go back and see. So Friday closing price at I want to show it on the 1 minute. So this is where we closed on Friday, and this is where we open on Sunday at 6 p.m. Then we also have what is known as new days opening gaps, which is the closing and the opening price of settlement. So we open at 6 p.m. every day, and that is the new day opening gap of the new day. So 6 p.m. on today is like Wednesday. So 6 p.m. on Tuesday, that's the new day opening gap for Wednesday. And we can see, like, for example, here 45, and then here is the opening. So here is Monday, and then Monday 6 p.m. that's the opening for Tuesday. That's why I call it new day opening gap on Tuesday. And as we know, when we have like multiple new day opening gaps and new week opening gaps, so the new week opening gaps are in orange in my case, and the new day opening gaps are in gray. So when there's a nesting, it acts like a magnet, so it's going to pull price to these levels. And this is also what we see here. So we clear the buy sell liquidity, and then price is pulled to the new day opening gap of Friday, 404. So if we go Friday, we will see this one that I'm referencing. Take it on the 1 minute. So this is this one. See how that is pulling price. And then we can see the same. So this was Thursday. I have to go here. Notice again. So this was the closing price on Wednesday and the opening price on Thursday, 6 p.m. So 6 p.m. on Wednesday refers to Thursday actually. And notice how price is being respected by these levels today. See how the candles are in the quadrant, the lower quadrant, and then only the wicks go a bit above. Notice the perfection here. Perfectly touching it. So this is algorithmic price theory in action. And then we had the last shot with only the wicks going up to the new wick opening gap of 30 over here. See the perfection. And then let's understand what happened in the PM session. So yeah, I would have loved to take the move higher, but my protocol of engagement for today was to wait for 2:30. So by 2:30, the price already has been moving up. So here 2 p.m., the FOMC minutes hits the market. So we're waiting until 2:30. And then once 2:30 happened, over here, then we have a pool of liquidity above price. So this is some buy-side liquidity. So I'm going to show it on the 1 hour. So it's referring to this buy-side liquidity. So I added this close and open price. This is a rejection block. So this will be a first target. And then we have this actual high. So I was anticipating that since we have that pool of liquidity, it might want to go up and take it. So, um, so here we left the pool of liquidity just above price, these two levels. And then at 2:30, I noticed this market structure shift. So this is the 22 model of ICT. We take the swing low, we extend it to the right, it breaks it here and forms a CB, fair value gap. Here, I would have liked to engage in a short and tap into the first fair value gap of previous Thursday. So this is the first fair value gap that happens after 1:30. Could actually go there. So we go Thursday, 13:30. Here, see here, 13:30 happens. There's no fair value gap. There's no fair value gap until this one. And we take this part as well. Actually, like this, it should be. So we go back today and notice how it's respecting it here. See the bodies. See here how perfectly it touches the midpoint of it. So this is a trade that I was taking today. A simple scalp from here to here. What I didn't like was that this week went above the fair value gap. This is permissible because this is an order block. But in a perfect world, it should have stayed, it should have kept this part open. But this is still permissible, but it just makes it not clean enough. And it's expected that this is not going to be a very clean session because we had a very huge run just ahead of it. So it's likely to be more of a consolidation. It acted like a high resistance run. It still went higher to the targets, but it did it in a fashion where it's overlapping candles. So here I kind of took I closed my trade prematurely. Here would have been the stop loss, but I didn't like this move. However, I saw confirmation, like notice how like it's only the wicks that go above and do the damage, while the bodies are staying in the lower half mostly. And then we had a low, so this makes like relative equal lows here and here. And then a tap again into this fair value gap, another CB, fair value gap that is formed. Again, the wicks are going higher. And here I took a short in this. And what was interesting, so notice how this is happening during the macro time, 10 minutes before the hour and 10 minutes after the hour. And then here, price goes to the almost touching the last 3 days high. So notice this level, 18,713. So if we look here, this is the last 3 days high. So here it's going into a discount. And remember, we have this pool of liquidity up here. So here we get similar, a 22 model with a long 22 model. So this is the narrative. We almost touch the last 3 days high. And this makes it very bullish. It didn't even touch it, like it was just above it. And then we get the market structure shift, swing high, fair value gap formed, breaking market structure. It taps the fair value gap. Notice how the body is staying in the upper half of Thursday first fair value gap PM. And only the wicks goes here in the upper quadrant. So this is like a really clean indication that price is going to go higher. Then we have a bullish breaker. So the bullish breaker is like low, high, lower low. Market structure shift happened. Notice the bodies are going upper. And then here, the bullish breaker, price comes down. It doesn't touch the low of it. And notice how the bodies are above it. This is like a clear indication that it's going higher. And we go and we take the buy side liquidity. Once it's here, if we go back to our new day opening gap, new week opening gap quadrants, Notice this was the market structure shift. And here we have our bullish breaker. And notice how price is going up to the new week opening gap. And this is happening during market on close. So notice 3:50 to 4 p.m. So it will be this move. And see how perfectly the new week opening gap is being respected at midpoint here. So this is the review of the PM session. I personally feel there's a lot of volatility in the market, which brings a higher risk. Just today, I've noticed how the margins have increased considerably with all the brokers, and that shows that it's very risky to trade right now. So it's good to trade on lower leverage. And this was my trade today. So here I was trading the move lower basically with the market structure shift, and here I closed some of my trades because of because I didn't like that this week went above it. But then I was still able to enter short here and take some of my profits here. And then I decided to stop for the day and just trade in demo. So yeah, this was today's session. It felt really nice to see price delivering to the relative equal highs that we observed earlier in the week, and then how price drew back up to the as a magnet to the new day opening gap and new week opening gap. And notice how interesting here, like this is the previous week range, and notice how we stop exactly at the 75% level. So the quadrants being respected again. So the algorithm that ICT is showing still works perfectly in the market. We can see its signatures. So hope you find this inspiring, and I wish you good luck and happy trading.